PCE inflation data expected tomorrow, August 29, 2025. Key expectations for July PCE report. The Personal Consumption Expenditures Price Index for July 2025 will be released tomorrow at 8:30 a.m. ET by the Bureau of Economic Analysis. This is the Federal Reserve's preferred inflation measure and will be crucial for September rate cut expectations. Consensus forecasts. Headline PCE inflation. Monthly change plus 0.2% versus plus 0.3% in June. Annual rate 2.6%, unchanged from June's 2.6%. Core PCE inflation, excluding food and energy. Monthly change plus 0.3% versus plus 0.3% in June. Annual rate 2.9%, up from 2.8% in June. Market significance. Fed policy implications. The core PCE annual rate of 2.9% would mark the highest level since February 2025 and represents a concerning trend away from the Fed's 2% target. Bank of America economists expect core inflation to keep trending higher and surpass the 3.0% mark later this year. Rate cut expectations. Markets currently price in a 70% probability of a Fed rate cut in September. However, inflation running at 2.9%, nearly 50% above the Fed's 2% target, could complicate this outlook. This will be the final PCE report before the Fed's September 16th-17th meeting. Key drivers behind forecasts. Tariff impact. President Trump's extensive tariff program is driving inflation higher. The effective tariff rate has surged from 2.4% in 2024 to 18.6% in 2025, the highest since 1933. Companies are gradually passing these costs to consumers. Sector breakdown. Expected price increases in used cars and trucks, continuing June's acceleration, transportation services, services broadly, 0.2% monthly gain expected, housing or shelter costs, persistent elevation. Cleveland Fed Nowcast. The Federal Reserve Bank of Cleveland's real-time inflation model projects core PCE at 2.96% annually for July, slightly above consensus. Their nowcasting model has historically been more accurate than consensus forecasts. This inflation data will be critical for market direction and Fed policy as it comes amid growing concerns that inflation is going in the wrong direction rather than sustainably moving toward the 2% target.